the disparity between Main Street and Wall Street. We had massive liquidity injections, money printing, zero rates, ZERP, as you refer to it in the book as well. You know, the negative yields ruined our economy. And a great quote from your book, from Fisher, QE put beer goggles on investors by creating a line of sight where everything looks good. It's changed the perception of risk and outlawed saving. Can we ever recover from this massive QE addiction?
Well, you know, I mean, that's a great, really kind of overarching theme right now, because we are watching the nation struggle with trying to extricate itself from this very addictive kind of policy. And you're seeing that there's a massive struggle. And, you know, it's very disheartening from my perspective, because we should be a nation that can handle, if you will, positive interest rates. I mean, it sounds absolutely ridiculous when you consider that credit card rates, for example, are whatever they are, 21, 22%, the highest in the history of mankind. And yet for certain sectors of the economy, they've been able to borrow at the lowest rates in 5,000 years. And, you know, when you strip away from, you know, consequences for taking risks, when you strip those consequences out, then there's going to be some poor decision making. And that's exactly what we've seen. That's why residential real estate, that's why housing's just gone crazy. You know, because starting in, you know, pretty much 2000, when Alan Greenspan, he left interest rates at artificially low levels and eventually trained U.S. households to view their home as an investment instead of as a place to live and put a roof over your head. And that mindset has yet to be distilled. In fact, after the pandemic, you know, the Fed really doubled down on setting that very perverse mindset. And so, you know, everything in a zero interest rate environment is perceived as being the equivalent, the adrenaline rush equivalent to going to Vegas. And that's just, it's not a healthy way to run an economy. And it also creates generations of, especially, you know, your younger investors who think everything's just so easy. You just got to put money in the market and let it roll, you know, put it on red and spin the wheel. So I think that this is the closest that we have come to trying to normalize interest rates. And I, for one, hope for my children and grandchildren one day, you know, for their sake, that Powell succeeds, you know, without, you know, bringing the U.S. economy fully to its knees. The fact is, though, there's going to be consequences, and we're going to have to suffer through them.